Welcome to another edition of the DHN Crypto Podcast. I'm your host, as always, Wade Teemer. I've been in the space since 2019 and I've researched a boatload of assets. But the number one reason I run this show is to share all that knowledge with you. Happy Wednesday to you. I hope your week is going by swiftly, swimmingly, as they say. On today's show, we're going to be talking a couple different digital assets. One being the XRP ledger. They've been picked up by Wall Street giant Guggenheim. But my question is, can it now challenge the existing tokenization giants with this new partner? And Chainlink was picked up by Hong Kong officially now. And if you know a thing or two about Hong Kong, their crypto environment is much friendlier. So the question for Chainlink is now, will this market be able to push Chainlink to new highs? And additionally, Circle, you started something. We've had two more major crypto firms come out and express their interest for going public. My question is, are we about to enter the IPO phase for the blockchain space? And if so, could a string of public crypto companies usher us into the mainstream? I think so. I've taken a look at the numbers, and I think you'll agree with me. So let's get right into it, guys. Of course, you know we got to run the material here. I'm on a personal mission right now to educate as many people as I can about this blockchain space. I don't care what network you buy. I don't care where you put your money. But the innovation and the technology behind this industry is fascinating. And that's all I'm trying to share with you. That's why I put together the Blockchain Research Library officially from DHN Research. You can access these documents in the link in the description under this video, as well as the pinned comment, make it easier for you. Much like with the affiliate partners for the channel, Uphold, SafePal. Uphold, you know about, it's the crypto exchange. SafePal is a hardware wallet provider, most cost-effective solution on the market. I haven't been promoting them as much as I should have, but SafePal was actually one of my original partners. So if you need a new exchange, Uphold. If you need cold storage, a hardware wallet, I'm pointing you in the direction of SafePal. And then, of course, if you want, you can check out the merch, guys. I'm telling you, these fabrics are pretty good. YouTube merch has had a bad rep in recent years, but I'm liking what I'm getting with spring. Summer's coming up. Got some nice styles for you. Check them out if you will, guys. So let's get into the show. Let's talk a little macro, and let's talk about the trend that Circle has kicked off. Because as you can see now, Uphold weighs IPO or sale at $1.5 billion valuation. Things are heating up, ladies and gentlemen. Now, the situation for Uphold, and we got this one courtesy of The Block. The situation for Uphold is very interesting. Digital asset platform Uphold is exploring a potential IPO in the United States or a strategic sale. CEO Simon McLaughlin told The Block the company's board has engaged investment bank FT Partners to evaluate its options, including a listing on the NASDAQ or a possible merger or acquisition with a financial firm or payments firm. Now, this is great either way, at least how I'm looking at it. But when you read this article, they definitely dig deeper into the pros and cons for each one of them. If Uphold does take the IPO route, they could get more funding. They would have a broader reach. They could definitely offer more exclusive staking offerings, DeFi opportunities like the ones that they're building with the XRP ledger and the Flare network. That can now be commercialized, ladies and gentlemen. Perfect example, and we'll dig more into this a little bit later, but Coinbase. You notice how the moment Donald Trump was officially in office, they kicked back on the staking. So did Uphold. Got to watch out for these things. Now, let's say Uphold decides to go the other way. Let's say Uphold decides to sell. Then they would be supported by a major bank or a large financial institution. Now, as I was reviewing the show notes, something popped up in my head that I didn't exactly jot down, but with the relationship that Uphold has with the XRP ledger, if Ripple wanted to hit a home run, This is who you should be trying to acquire. At least it was my thought until I pulled in a little more research, guys. I'm sure that with you in a second. But of course, if they sell to a larger bank or financial institution, they would also get access to more liquidity, more insurance, which would open the door for potential FDIC backing, similar to a bank or financial institution. It's not something that I'm familiar with seeing often in the crypto space. That's why I added it there. But if you look at the pros and cons of each, or the pros rather, it's sort of a win-win situation here for Uphold. But my question is, the question of the day is, would a string of crypto companies going public usher us into the mainstream? Because it wasn't just Uphold that has expressed their interest. Gemini has also began to put the paperwork in order, and they can move quickly because they already have a lot of leverage on Wall Street. The Winklevoss brothers, yeah, they got pulled. So that made me look at the numbers, ladies and gentlemen. This is just 24-hour volume from the top exchanges and the names who could potentially make this public move. If Binance decided to go public, okay, they're running $19 billion in volume a day, right? Coinbase, 2 billion, Kraken, 1 billion, Circle, 12 billion, just went public. We understand why. Gemini is aiming to go public. That'll definitely increase that 280 million. I added crypto.com here and Binance and Kraken. Well, crypto.com and Binance, because you can see the numbers there. Those are the potential public players, is what I'm getting at. Kraken has even mentioned it in the past before, that the idea would be feasible depending on market conditions. But if you look at these numbers all together, we're north of $50 billion here just in the last 24 hours that's being moved just across these platforms. Now, you may be wondering why the asterisk is next to Uphold's 15 billion. Because to be honest with you, I couldn't get an exact number, right? Masari didn't have the data. CoinMarketCap, which is the largest data aggregator for the space, didn't have the data. Neither did CoinGecko. But Uphold has their financial information on their website. Now, I have only seen that dealing with a traditional financial institution. So there are questions there, because the numbers that I actually saw, all right, close to $65 billion. Uphold has already moved $65 billion. I couldn't precisely find whether it was in the last 24 hours, so I dropped an approximate here based on the number that I saw. Point I'm getting at is, there is enough money within the top names in the crypto space that if they decided to go public one after another, we'd be undeniable, irresistible by 2030. This entire market would be irresistible. It could genuinely, at least on our end, right? Now, I'm not saying that these stocks, once they go public, would just continue to go upwards, but they would definitely perform quite well. And their positive performance would make the entire crypto industry look even better. Imagine how many more people are going to be interested in the crypto space and willing to invest in the assets that are attached to a lot of these names if they are public. Because what I'm seeing in Circle's move is that now the stable coin is getting recognized more. And again, I genuinely believe that as the stable coin gets more recognition, the public networks that support the stable coins will get more recognition. Now, there's another angle to going public that Uphold didn't really highlight, but I'm going to unpack a little bit here. What happened when Coinbase went public? Okay. They started landing deals with the likes of the NBA, WNBA, Now you see them all over the games. Uphold could begin to pull off the same types of things with the public. I also imagine in the coming months, Circle lined this up perfectly because college football is coming up. NFL season's coming up. I can just imagine some sponsored halftime segments brought to you by Circle. Crypto.com did it all last season with college football. I can just see just a little circle thing right there next to Patrick Mahomes, little graphic, right? That is what you get when you take the public route. Of course, this can also be funded, I assume, by a bank, but you're not really seeing JP Morgan Chase like doing any sponsored sports segments. Okay. So I emphasize that because if we are to be ushered into the mainstream, we're going to have to be attached to mainstream entities already. You don't get more mainstream than sports. So, following the Coinbase example, sponsored sports segments by Circle this football season. Okay, to me, Uphold feels like an MLB. Okay, I could see an MLB sponsorship somewhere in there. That's just my opinion. Uphold has a baseball vibe. Okay, y'all know I'm a big sports fan. So sports fans out there, rock, y'all got to rock with me on this one. But to really bring it home, guys, like I said, it wouldn't just be those names. There are other top exchanges that are looking to enter the U.S., but couldn't because of the previous administration and the previous views of that administration. But if they all began to make the move, guys, it would cause a chain reaction. Crypto.com, to me, is going to be next. They would be next to make this move. It would be a race between Crypto.com and Kraken as far as who's going to go public on the exchange level if Uphold does make this move. I want the public option. I want to see Uphold go public because it will cause a chain reaction. That would be, and then Gemini, I can't forget about Gemini because Gemini has pretty much, as far as everything that I know, made a decision on it. They're locked in. They said, we want to do this. So if Gemini does it, once Gemini does it, if Uphold decides to follow suit, I'm telling you, 2026 will be the year of the IPO, maybe even extending into 2027, where we would see names like Kraken, Crypto.com, Bybit, BitHum. What's the other one? Run by Arthur Hayes. Is it Bitfinex? I think it's Bitfinex, right? And then the big daddy of them all. If Binance goes public, you can't tell me everybody won't be interested in crypto. It won't be on everyone's radar once that happens because Binance already has a global infrastructure. So I genuinely think we can wrap with this point here. A run of crypto IPOs will usher this market into the mainstream. So if you're holding while we're underground, which is what we are, I'm going to bring out the rap analogy for you. We underground right now. But the moment one of these big underground entities gets pulled up to the mainstream, what do they say? A rising tide lifts all ships. That's what an IPO run would look like in the crypto space. Let's jump forward though, because we got some more stuff to talk about. Got to get into a little bit of Chainlink, guys. Hong Kong has officially chosen, along with Australia, to run Chainlink as part of their financial infrastructure. This caught my attention mainly because over the last few years, I have watched Hong Kong go from being very nervous, much like other nations, to fully embracing the crypto space. At the same time, I've also sat back and watched the Chainlink community deal with Chainlink's bipolar price behavior. All right. What I'm imagining now is because Hong Kong's crypto market is significantly more friendly. And let me begin to show you what I'm talking about. First, this is an illustration of the mechanism that they'll be running in Hong Kong in collaboration with the Hong Kong Monetary Authority. That's the number one name in the land, and Chainlink is with them, so that's good. But Hong Kong's stablecoin law opens floodgates for a boom in digital assets. Investors are increasingly interested in stablecoins, which are digital tokens pegged to a reference asset that we already know. But what I'm getting at here is there's been a lot of discussion around stablecoins here in the United States, and Chainlink has plugged themselves in with the best of them. There's also information coming out from Chainlink expressing how their network is perfectly suited to run a stablecoin infrastructure as well. That is why Circle has officially, as of this morning, according to the email that I got, completed the CCTP from Chainlink. They have embedded it into Circle's new payment network, right? So what I'm getting at here is because Chainlink is associated with a market like Hong Kong, it really gives them the best advantage for their technology to be capitalized on. Because when you take a look at the fintech space, the landscape for Hong Kong, I was only able to get a few names on the screen. The graphic clearly shows you a much broader outlook here. But HSBC, Bank of China, Hang Seng, Standard Chartered, Citibank, Hashkey, these are names that will potentially be working with Chainlink in the future now that they're in the Hong Kong market. And if you can take a look at some of the names in the graphic under the cryptocurrency side, you got OKCoin out there. You have Dash, Ledger, Datum, KuCoin, Huobi, which is another huge name. The Hong Kong environment, it's very strong. And their added advantage is the fact that they have the regulations behind them. BitMEX, that's another name. I believe that's the one I was looking up earlier. But they have that legislation behind them. So that means there is no friction when it comes to the promotion and the adoption of these technologies, which is something that up to now, I don't think Chainlink necessarily had, because it was primarily US focused. They were building out infrastructure here for US companies, but these US companies were waiting for the regulatory environment to clear up. Now that it has, we're obviously going to start seeing a lot more US companies promote or display their use of Chainlink. But this Hong Kong market, it will come out faster because we still got to finish our paperwork. Hong Kong's is finished. And again, when you look at the names that are involved over there, I can't wait to see the headlines. I can't wait to see the headlines. Now, what makes it even better is when you tack on Chainlink's use cases and how they align with a lot of the companies that we were just looking at. Data management, insurance verification, supply chain management, enterprise interoperability, government and public sector. So because Chainlink is the master of data, because it keeps everything tied together, it can really fit in to multiple municipal use cases, which is what we're seeing a lot of coming from places like Hong Kong, South Korea, the rest of China, and pretty much everywhere that isn't the United States. It's the governments that are most interested in the blockchain technology. And because Chainlink does have a track record with the US government, other nations will see that and be like, oh, okay. So you're able to handle the mega power. Let's see what you can do with our power. So I like this arrangement for Chainlink. I really do. I really like this arrangement for Chainlink. And again, just to remind us of some of the biggest firms, HSBC, Bank of China, Citibank Group, Standard Charter, the work that those first four do, same thing that JP Morgan does. Let's just say they want to share some of that information. Now, these networks can also look, or these banks, financial institutions can also look into collaborating with smaller networks, setting up a similar arrangement that Chainlink had between Ondo and JP Morgan. Now you're electrifying the space even more. To figure out who those individual networks would be, of course, that takes another level of research, but I leave that up to you. I'm going to just show you the direction to go in. So, bottom line, when it comes to Link's position in Hong Kong, them being adopted in a crypto-friendly environment, I believe will push them to new heights. And yes, I am referring to the price chart. Because in a bull environment, once the products have the permission to be promoted, it's really hard to stop at that point. It really is. So we're rolling, guys. Let's talk a little bit of DeFi and get into this clip here from Paul. Still working the kinks out here. But I want to introduce this clip first from Paul Atkins, our new SEC chair, courtesy of BitcoinArchive.com. His understanding of the DeFi space is what has pulled me in to this gentleman. Okay. And when we get back, because, we got to take a little break here, pay these bills. When we get back, I'm going to break down what he said and show you how this could potentially magnify the DeFi space once again. And we could see DeFi Summer 2.0.
Hey guys, I got a quick message for you. Let's say you're looking to buy some crypto, like the ones mentioned in this video. Consider using our crypto exchange partner, Uphold. With Uphold, you get access to more than 200 crypto assets through its simple-to-use trading platform. Uphold has been around more than a decade, so it is a name you can trust. With over $2 billion in reserves and $44 billion in trading volume, I've yet to lose a trade on Uphold. To the more experienced investor out there, Uphold also has a line of precious metals and national currencies for more diversification. For me, I'm having fun using Uphold's Baskets tool. Uphold lets us set aside a certain amount of money to invest in different sectors of crypto. With one click, you can diversify into the big three, meme coins, or the financial assets like Hedera, Stellar, and XTC. But listen, crypto assets are very volatile, and it is always best to manage your risk and do your own research before using any platform. I recommend Uphold because before I was an affiliate, I was and still am a user. So if you use the link below, it helps support the channel. I want to thank you in advance.
I appreciate y'all. Welcome back to the show. So, SEC Chair Paul Atkins has been very positive about DeFi from a technology side, meaning he has an understanding of the inner workings of decentralized finance and why things like staking are not necessarily a function of a security, but more a function of a software, like an operational element. I believe the analogy I brought up a couple weeks ago was the accelerator for your car, your gas pedal. For a proof of stake network, if you can't stake, you can't press the accelerator, the car doesn't move. If you can't stake on a proof of stake network, the network doesn't move. That would or would not happen regardless of your investment. This is what the SEC is beginning to understand. And for that very reason, I believe that thanks to the new SEC chair, we could be right around the corner from a DeFi Summer 2.0. Let's jump into the clip so you can hear from him, from the man himself.
Another core feature of blockchain technology is the ability of individuals to have self-custody of crypto assets in a personal digital wallet. The right to have self-custody of one's private property is a foundational American value that should not disappear when one logs onto the internet. I'm in favor of affording greater flexibility to market participants to self-custody crypto assets, especially where intermediation imposes unnecessary transaction costs or restricts the ability to engage in staking and other on-chain activities.
Now, this pairs well with a story that we covered a couple last week, as a matter of fact, where other members of the SEC, a division of the SEC, gave statements on protocol staking activities. And in those statements, they also acknowledged the operational importance of staking for certain crypto networks. So, this new level of understanding from the SEC was unimaginable years ago. It genuinely was. And I want to go back to the quote specifically on how he compared this to private property. Private property. That's the part that I found to be the most profound, because this shows that you have a true. I wouldn't be surprised to find out that Mr. Atkins has used DeFi and is currently using DeFi, because you have to have been in it to give us a perspective like this. The right to have self-custody of one's private property is a foundational American value that should not disappear when one logs on to the internet. This can echo into the world of blockchain games, digital ownership, or fan tokens. This can really get deep. But for the sake of the DeFi conversation, when he's referring to private property, self-custody, he's talking about your money. Your money is private. It should be private. All the more reason why I'm looking at these comments from the SEC and I'm asking the question, is Mr. Atkins getting ready to reignite the DeFi space? Just leaning on this perspective, guys, let me show you the world that I envision. What we have here are popular meta banks that allow you to control your own money without having to go to a brick and mortar institution. Some of y'all know these names: Chime, Venmo, Cash App, Zelle, Greenwood. Yes, I have a Greenwood account. If you black and you don't have a Greenwood account, okay, come on now, get it together. Shout out Killer Mike. But the point I'm making is, with this renewed perspective coming from the SEC, where they see DeFi and DeFi protocols and DeFi activities as a form of personal property, then it creates an environment where the top crypto exchanges, obviously Coinbase, Uphold, Kraken, Gemini, can be more vocal about their DeFi and yield-bearing opportunities. We began to see that with Coinbase, Uphold, and Kraken, where the moment Donald Trump got inaugurated, within weeks, we started to see staking reopen up on these platforms. Not quite sure if Gemini has tapped back into it. If they haven't, they will. That will be on the centralized side. But again, what Mr. Atkins is emphasizing is the personal element to it, the personal property element to it, the self-custody element to it. When you're dealing with centralized exchanges, it's not self-custody. Even though Coinbase and Uphold, and I think Kraken has a Web3 wallet too, they offer self-custody options, but the self-custody is still supported by their servers, still supported on their platforms. But when you get into the DeFi side of things, the truly decentralized self-custody side of things, you get into names like Saucer Swap, Hashpack from our friends at Hedera, Folks Finance over at Algorand, VVS Finance with Crypto.com, and the first DeFi platform I ever used in JustLend on the Tron network. These are, I wouldn't say lesser known, because if you're in the DeFi community, these names are the biggest. You know these names, but these are platforms that are permissionless. You don't, as long as you have an internet connection, you can access these platforms and you can participate in the DeFi ecosystem. I started with JustLend on the Tron network. It was fast, it was cheap, the interface was simple, and they walked you through the process. I went from JustLend up to VVS Finance when I had my Crypto.com account. Man, I'm telling you, VVS. All right. It's a reason why they're leaning with the diamond marketing, because it was some money to be made back then. Back in 2021, 2022, the rates were much, much higher. All right. Definitely had to get in early. It was one of those assets where I was fortunate enough to get in early, and that's what I did. So VVS Finance was fun. More recently, I have been in the world of the Hashpack. That's where I store my Hedera, engage with the Hedera ecosystem. And then you guys also know, recently I took the masterclass with Algorand, so they got a special place in my portfolio now. So I'm beginning to explore protocols like Folks Finance and the DeFi opportunities that they have in the Para wallet. So it's names and protocols like that that are permissionless, that may or may not be attached to much larger exchanges, like in the case of VVS Finance. But these platforms will serve a similar function as what the meta banks do for the banking industry now. Because when you really take a look at what a meta bank does, they just remove the teller in the building. But it's the exact same thing. Let me correct myself. Not the exact same thing. Because unlike a traditional bank, there are things that you can't do with your metabank, like CDs, retirement accounts. At least at this point, I know they're trying. You can't do retirement accounts. You can't do CDs. You also can't do like large scale loans and things like that. However, on these DeFi platforms, you can. You can do borrowing, you can do lending, you can do yield farming. So what I'm getting at here, the point that I'm making is, when you really dig into what our new SEC chair is saying about DeFi and the right to have self-custody of one's private property, this could ripple into creating an environment where DeFi protocols, like the names you see here, become akin to the meta banks that we are all very familiar with in terms of personal finance applications. These protocols here that I'm showing you are the new personal finance applications. The new personal finance application, the new meta banks that are extensions of the centralized exchange infrastructures. Now, we can't knock these centralized exchange infrastructures because they're putting us on the map, guys. All right? But with Mr. Atkins' comments and the new perspective coming from the SEC, my take is they could be getting ready to reignite the DeFi space. DeFi summer, if you weren't here, this was 2020. That was fun. It was an interest, and I say it was fun because it was mainly, it wasn't about all of it. It wasn't a lot of tribalism during DeFi summer. That was the one little pocket in my crypto timeline where I didn't see a lot of tribalism. Even networks that didn't have a lot of DeFi they recognize, their communities recognize the potential of DeFi. And then a lot of these DeFi protocols, like I said, were permissionless. So everyone was welcome. They were all EVM compatible. They were bringing in everybody's network. That DeFi summer, echoes of the DeFi summer, are genuinely why I believe anyway, the Flare network is fighting so hard today to bring DeFi back to the XRP ledger, or to the XRP ledger, which would be another, to the point of Uphold, personal finance DeFi arrangement on the XRP ledger. All of that, yes, I did get from a change in perspective from the SEC. But guys, if you've been around here for a minute, the SEC has been our biggest adversary. And to now hear the new perspective, the new understanding that they have, definitely makes me bullish, right? Definitely something to be bullish about. So let's jump forward, guys. Wrap up the show, and talk a little bit of the XRP ledger. Guggenheim chooses Ripple's XRPL for latest tokenized commercial paper issuance. Ripple will also invest $10 million as part of the Guggenheim Alliance to accelerate real-world asset tokenization on the XRP ledger. So I looked into Guggenheim, and the audio won't play on this clip for copyright reasons, but I looked into Guggenheim. Been around since the 2000s, move a lot of money around, nor getting close to the trillions, if I'm not mistaken. They deal with a lot of private equity investing. They're in many different verticals. So that's definitely good to see. They got a positive track record. As far as their work with the crypto space, I want to say last year, yes, this was last year, they issued $20 million worth of tokenized commercial paper on Ethereum. And the chart behind that headline, courtesy of RWA.XYZ, is showing us the metrics for that commercial paper as of the 6th of June. So $20,582,000, $20.5 million roughly has been put into the market by Guggenheim. What I was observing when I was looking at this chart as I was putting this together was how this started at 20 million. But the deposits over time have been very, very small, like 40 to 50,000 at a time since September. I'm just curious as to why that is. But nevertheless, you oftentimes want to verify these headlines that we see in the crypto space, and that's what we've done here. So we know the 20 million is out there. But the question that we put forth at the top of the show was, can this now help the XRP ledger challenge the existing tokenization giants? Because sticking with RWA.XYZ, when we look at the league table that they provide us, excluding stablecoins, you can see the XRP ledger is in 10th place. Protocol value, total value, $116 million. And this is spread across 4 issuers. This is what impresses me the most. They are able to generate $116 million in value, tokenized value, across 4 issuers. Avalanche only has 178 million across 28. Now, I don't need to do any math right here. You can see how that discrepancy is pretty big. What I'm getting at here is Guggenheim only has to tokenize another 50 million or 60 million for the XRP ledger to surpass Avalanche, at least when it comes to non-stablecoins. Because we're going to talk about the stablecoin bit in a minute. But this is still impressive because this represents US dollar straight raw tokenization on the XRP ledger. So if all they need to do is tokenize $65 million on the XRP ledger, and boom, we've beat Avalanche. Arbitrum may be a bit more difficult, but again, look at the discrepancy here. 106 issuers, protocol value $246 million. XRP Ledger is already just about half that, would be half that with Guggenheim, and it would only be listed as the 5th issuer. Because when you look at the 4 that they have now, 3 of them is Archax, and 1 of them is the Open Eden T-bill. So 3 Archax offerings and 1 Open Eden T-bill. And with the Open Eden T-bill, that's actually shared across 4 different networks: Ethereum, Solana, the Ledger, and Avalanche, if I'm not mistaken. So they're only getting a portion of that. It's Archax that's actually tokenizing the most RWAs on the Ledger right now. I believe between their 3 offerings, you have 2 liquidity funds. The 2 liquidity funds are the biggest. One at 55 million and the other one's at 45 million. Then you have another tokenized product. That one is sitting at about 11 million. You can double check my numbers. Go to rwa.xyz. But I still find this to be pretty huge. With Guggenheim, all they got to do is drop another 50, 60 million on the XRP ledger, and it starts climbing that ranks. It'll also get it closer to Algorand's tokenized stock offering, the only one that they have, at $303 million. Because you can guarantee it won't just stop there. Once they get it going, they'll keep feeding it. And another thing that I have noticed is some of these tokenized products, especially in the treasuries, they seem to sit and act like stablecoins. So you can also look at this as that 116 million. You can look at that as 116 million in liquidity on the XRP ledger already. $116 million in liquidity has already been tokenized on the XRP ledger as of today. When you begin to add a few more issuers, look at the ratio of RWA count to the value with Stellar. 9 RWAs, $465 million. That's the rate that the XRP ledger would be moving with the partners that they have in place now. So, to answer the question, can it begin to challenge the giants? Yes, because with just 4 issuers of RWAs, they're already at $116 million. They're about to add a 5th, and if they added 20 to Ethereum, come on, you got to put at least 30 to 40 on the ledger. You have to. I ain't running the business operations over there. I'm just giving a suggestion. Now, to the other side of this, yes, with Guggenheim, Archax, Open Eden, the ledger can begin to challenge in the world of RWAs. But in order for it to win, it's going to have to kick on the RLUSD or partner with a major stablecoin, because you can see the stablecoin numbers changes the entire game, folks. Changes the entire game. So if we're really looking to answer the question, can XRP challenge the tokenization giants? Yes, it can challenge. Can the XRP ledger win the tokenization race? Not without a stablecoin and not without RLUSD. Here is the best part about that. When you look into the press release with Guggenheim and Ledger on Ripple's site, you find out that RLUSD will be one of the purchasing vehicles for this new product. That pulls it all together. Now, I know a couple weeks ago, I had some things to say about certain sides of the XRP community. But as I made it known in that piece of content, I don't have a problem with the technology nor the token, which is why I am telling you about this now. What I am seeing being done with the ledger now is impressive to me. It's what's being done with the ledger that will drive more value to the token. To that point, when I really look back and look at it, it's the most activity I've seen on the ledger in a few good years. And it would also explain why XRP has stayed above that $2 price point. Even when the market has wobbled, Bitcoin has slipped down as far as 99K. It has. Even though May was pretty good, kept us above float, it was that little dip. Even with that dip, I don't think XRP budged at all. So, I'll end with this. This story showed me that we are reaching a point in this market where our data sources are now getting more solidified, more concrete. We can start tracking things now, which means we can start proving, right or wrong, which networks are truly leading the charge, which ledgers, which blockchains are moving the most money around. This will change the conversation. And with the conversation changing, there was a point where people thought the XRP ledger wouldn't be in the new one. Judging by this league table, I would say the ledger is still top 5, top 3 in the conversations. So with that, guys, that's all I got for today's show. That's all I got for Wednesday. Of course, you know what I want you to do. If you made it this far, drop DHN down in the comments. Let me know. And don't forget to check out our official DHN research library. These documents will give you a much deeper understanding of this entire blockchain world. Another way to support the channel, check out one of our affiliate partners. If you've already signed up, let one of your friends know. All right. Get as many people into this space, this new financial system as we can, man. Because as Mr. Atkins said, it's the self-custody. It's the private property specifically. The new money, the new digital assets, these are still ours, right? It's that freedom, it's the unlocking of that freedom that we should be sharing with everyone else. Simply put. So check out the affiliates, check out the merch, guys. Tell me that new finance magnate hoodie ain't hard. Wait till y'all see the t-shirt. All right, links will be in the description under this video as well as the pinned comment. And with that, y'all know what time it is. If that money is digital, so is the hustle.